Can everyone hear something now? So just for future reference, hi Brock. We start at the top of the hour. So it's not your hearing, it's not your seeing, your vision. Here we are. Hello, Shahab. How are you? Okay. So can everyone see this lime green line here? Give me Y if you can on the NAS. So how long you think I've had this line here? Take a guess. Think I drew it last night? July? Maybe, yeah. No, maybe not that far back. I've had this line drawn since 1929. It extends from the high in 1929 and just tagged it here. Okay, so it's a very historical line. No, not really. You gullible person, you, Shahab. Anyway, probably drew it in here after this high, and we never fulfilled it here. And you know, to me, it's a classic 3 drive. See that? 1, 2, 3. Diverging here, diverging here. What's interesting is the short-term stuff is glaring, right? See this high? See the new high? 4-hour. 1 hour couldn't even confirm with this, and I read some chatter. It has something to do with China, right? This candle right here. We cut some type of bullshit temporary deal that probably doesn't happen in a week or so. Huh? Okay, anyway, so is it an automatic short for me? No. It's a probe because earlier in my career, to me, this would be it. Okay. But I've lived through enough. What am I worried about? Anyone know? Why don't I just like put 100 lot on here? First of all, I never go all in anyway. But why? What's a possibility that we could have here? Because actually, I'm looking more toward next week. Although, I could, not pull the trigger. So I'll put my one toe, one toe in the water. No. How many times have we seen throwovers, right? And throw unders, right? Where we get to wedge lines and it blows through it for a little while, right? So, I mean, it's possible. I know a lot of people are talking 3,100 in S&Ps. Okay, I mean, 3,120, we could be there next week, right? So I've taken enough heat just trading wedge lines that I do suspect that there will be some type of throw over here. And so, how do you trade it? If we do have a throw over, you let it do its thing above the green line, let it do whatever it wants to do, then back inside of it. So, I'm projecting something that may or may not happen. This could be it. So, toe in the water, but aware that we could end up blasting through this line for a few days. Yeah, more than one toke. One bong over the line, Forex gal. All right, anyway, so toe in the water. And then if you have a throw over, maybe scale in, but it's so close I could taste it. We have Ben Maldonado with us today. Ben's an excellent cycle guy. I know that he's looking for a temporary high, but he lines up with a lot of the people that I've talked to, like Martin Newton that I brought in here. That's looking more towards the spring for a more important high in the market. Okay, so I could see that happening. Uh, so that's your Nasdaq and S&P. Also, I don't think oil is done yet. We had this, and some of the guys I talked to during the day said, "Oh, we may have missed it. It was a three driver." So this is one of the reasons why it may not be done unless we fail here. We could still trade up towards 58 and a half. One more high is possible. Although this is tempting for a failing rally in crude. And then maybe we have some type of break in the dollar, one more break in the dollar. That's not going to hurt the market, right? So, and perhaps we're not done in yen either. A lot of these things like Nasdaq and oil, they look like shorts for maybe at least a day, but I'm not sure that the yen is done either. I covered my shorts yesterday in the low 90s. It went to almost 60, and now we're pressing the highs, trying to reverse here. But I know a lot of people that had counts in the end, and Blake, and a lot of people are starting to call this, and maybe it is an ascending triangle that could head up to here. I'm more looking for the 110 handle maybe up in here for a possible failure of to end this rally recovery that we've had from 112. Also, something else that'll tell us, and we haven't quite completed either, our yields, right? So yields pulled back a little bit yesterday. I'm sure they're going to be higher today with this market. And um, since this low here, I've been talking about us taking out this high, and equality is going to give us about 2%. So I'm thinking that we need to have this finish, the yen finish, the oil finish, TLT break down and trade down towards this level, maybe into next week, and that's going to be a nice buy. This to me looks like it's corrective, and that there's one more blast. So once yields finish and the pullback in bonds is over, you buy bonds and you probably short the market and get long gold once that's over with. Okay, so gold's gotten hammered, and I don't think it's going to turn until we get a turn in the yen. So, hi, Claudia, how are you? Those are my views. Any questions about what I'm thinking in here? There's no such thing as a silly question, only silly answers. Okay. I want to remind everyone that, something I've noticed. Yeah, I'm maybe one pullback, Shahab. Yeah, and that was the chart of the day, EJ. Anyway, what I've noticed is that you don't know how many people come in here to face that have their own services. What does that tell you? Yeah. I mean, they run their own services. They're experts. I welcome them. Okay. But there's a message in that, isn't there? They like my voice. Yeah, Gregorios. Oh, let me ask you, did you subscribe since you're still here? Because I could bounce you. Like, you have your own service and you come in here. You say it's because you're lonely. I know why you come here. Well, I have Peyronie's disease. So that's all I'll tell you about my size. Look, Google it. Anyway, I find that interesting that experts come here to face for our ideas. I don't know. I guess there's nothing wrong with it if you want to live in that universe. So I want to remind everyone to try it out. I mean, Gregorio's trade's so huge that he can at least risk a buck here, or 10 pips for a monthly subscription. That's what you're waiting for, John? Yeah, I've seen those numbers, 110.50. Because you know what? This is why people come here. Blake, Grega, Stelio, Steve, not for me, Joe, Paulie in the morning will prep you for face. Amanda, Andre, this is why people come here. But it's only the tip of the iceberg. Hi, Amanda. Oh, I have to sign in. Oh, they canceled my subscription. Oh, I just joined. No, I don't think it would be an equal trade. Okay, traders are entering for the day. So this is why people subscribe. Look at all this work. You know how many man hours it takes to do this? Keep it updated, keep it fresh. Have a look around. Well, so I would say try us for 90 days to make a valid assessment, and let me know if you get more out of this than you get just from face. Good morning, Blake Morrow. Look at that platform.
Hey, good morning. Good morning, Dale.
I'm fired up, man.
You're pretty fired up today.
Yeah. I don't know. I just, I'm having some problems the last few years with moochism.
Moochism. Yeah.
You ever hear of that?
No,
Condition?
that's a new one to me.
Okay. Anyway, Google it.
So I'm the guy when I see like homeless people on the street. We have our fair share in the winter time here in Arizona, and they like to congregate around the Scottsdale, Arizona area. And so, they're on street corners as, I'm driving by, and I always try to explain to my kids as, they're in the car, like, look, a lot of these, guys and gals, they've fallen on hard times. And so this is, they medically, they don't have the means capable of
Yeah.
feeding for themselves. So I try to help people out, especially ladies, older ladies that are homeless, or uh, uh, you know, people that
Struggling.
that look like there's something wrong with them.
Yeah.
Then but typically, your male that is
Out there.
look like he's like could actually do some work, and looks fairly, and it's hard to judge a book by its cover. But if I look at somebody and I'm like, that guy could be working, doing something, you know, uh, you know, I tend not to help out, but I tend not to let the mooches get to me. But there are cases where
Yeah.
I
I don't call any of those mooches. People
no.
that have money that also are in business and try to get everything for nothing except they charge what they put out, to me is a classic mooch.
Well, what I was gonna say is now I actually keep granola bars in my car, and so when I'm I actually give
Actually,
people granola
Blake,
bars.
since you brought it up, I always I give them money, and people go, well, Dale, you're giving them money, they're just going to spend it on drugs and booze. And I go, well, at least they'll have relief for 10 minutes. But what he says, it makes good sense. He has a pamphlet of all the free services that people could go to, shelters for
Oh,
help.
that's good.
It's here in
That's good.
San Diego, a guy from my church, and you hand them one of those, okay, for where they could go to get help is worth more than giving them a $20 bill.
It's a great point.
Yeah.
Great
Anyway.
point. Hey, anyway,
All
that's
right.
we're on a
Thanks for
totally
putting
different
up
subject.
with I'm a very emotional person.
You are you this
So
I
anyway,
know this I know.
thanks for
Uh,
letting me be me here, bro.
so I was thinking today.
Yeah.
Well, there are a bunch of things on my mind. I've been up. I got up a little earlier this morning than normal. I got limited out of a U.S. dollar Norwegian krona short. There was economic data that came out overnight. I knew the industrial production. These numbers were really outsized, bad previous month. And I thought they would, they would actually come in a little bit better. The industrial production numbers were actually still worse than the forecast here, but manufacturing production numbers corrected a little bit. Anyway, what I'm trying to point out here is that previous months were so bad. I thought there would be some sort of revert back to the mean in the numbers. So I was short US dollar Norwegian krona, and I think I talked about this yesterday. I was short it because I do think that it's peaked, and I think, and I was telling you guys, if I'm going to play the dollar short, I'm going to play it against the US dollar Norwegian krona. So I was short it overnight. Got limited out higher than where we're at right now, like 910, and but I still want to be short. I still want to actually short it. If you look at the euro Norwegian krona really quick, you'll notice that it's actually broken down. And this is I tweeted it out earlier, but this line here is from a breakout point from 2008. The highs right here. And as Chi in our chat room was pointing out, we were testing this level here, which is we get a daily close below, you know, that support zone. Then it's in trouble, and you can actually do this and say, well, there we go. So yeah, really below here, we're gonna have some downside, some significant downside, and I do think it's coming. So what I want to do is I want to try to short the US dollar and Norwegian krona on any type of rally. I could play the euro Norwegian krona as well. I'm a little worried about the euro because I'm a little worried that the euro can still squeeze. So and I'm not necessarily bearish the euro at current levels. I think the euro is, constructively long term trying to make a base. So therefore, I don't want to be on the short side of the euro necessarily. I would rather be on the short side of the dollar at this point. I do think that the dollar has peaked, but that's how I feel. So you can play the euro Norwegian krona, or the US dollar Norwegian krona, however you like. But that's not what I really want to talk about, though. I want to talk about the strength of some of these commodity currencies, and more importantly, what happened last night. Now, last night, the Chinese finance minister, here, let me see if I can read to you what he said, if I have the right in front of me. They said, well, a couple of things came out actually last night before I went to bed. China is putting in jail fentanyl smugglers, and I thought that was kind of interesting. But it looks like that the finance minister said, "Oh, here we go." Um, the remarks, they were pretty vague, but China's Commerce Ministry said Beijing and Washington have struck a deal to cancel existing tariffs in phases. Now, we don't know what the details of that is, but the fact of the matter is, it doesn't. It seems like we're still making progress, but the stark reminder of what this looks like in the FX market was really seen in the Aussie yen. I mean, the Aussie yen, as you can see here, we're challenging this breakout point here, which if you guys utilize Forex analytics, let me just show you. Let me find the Aussie yen. So Aussie yen, Asian session update. The Aussie yen is challenging channel support and also the 74.54 breakout point. This could be pivotal for bulls to hold. That was last night in Asia. Today, sharp rally at the breakout point last night in Asian trade. However, the Aussie yen is still prone to false breakouts, and that was my update here. As you can see, you got false breakdowns, false breakouts, false breakdowns, false breakouts. So, got to be a little careful with the Aussie yen. But the point I'm trying to make here is that we are. You can see what happens with a China-U.S. trade deal. It's kind of like it's manifesting in the way that you're seeing these really sharp rallies. Now, I had well, before I even go there, one of the other things I want to talk about is the rise in yields, or maybe better yet, the breakdown in the 10-year. The 10-year is breaking this is a 1-year trend line. 1 year. Okay. We're breaking right now. If we break below this 128.15 on the 10-year, that's going to be a pretty bearish break. That means yields are going to rise. If yields rise, what happens? Dollar yen. Dollar yen rallies. We have this big inverted head and shoulder pattern. You got stocks that are stronger. This dollar yen is ripe for a rally. I do not own it. All right. Nor do I own any yen pairs. I don't own the Aussie yen, New Zealand yen, any other yen pairs right now. I played the New Zealand yen 3 weeks ago when I was in Napa, and I played this whole rally here, which made my entire month last month in October. Right now, I'm just kind of I'm standing aside, but you see the Aussie yen's approaching the 200-day moving average. Dollar yen's got this big inverted head and shoulder pattern. Yields are rallying, and if we get if there's this China-U.S. trade deal struck, we're gonna see this probably relatively quickly. I would say 112, 113, pretty fast. Aussie yen, would clear the 200-day moving average, probably rally to like 80, 81, 82. That's 400 or 500 pip moves. And previously, Dale, you here? Might be on mute.
I am, if you need anything.
Oh, Stelios.
Dale said he'll be back in 5 minutes. So
okay. So previously, hey guys, good morning.
Good morning.
If you guys remember what I was talking about as far as a China-U.S. trade deal, I want to sell a rally in the China-U.S. trade deal. I do. A deal gets struck, I want to short the market. But I also said I'd like to wait for a few days to let it work itself out before selling a rally, because my opinion is this: global economy is slowing. It's already started to slow. The market's going to be a little euphoric initially, and then you got to look for your opportunities to be on the short side of the stock market. And that's like the way I really want to approach the stock market. I do want to short the S&Ps, and I will do so after a deal struck. But the fact of the matter is, I'm looking at all these charts and I'm thinking, man, we might actually have, it might be a week or two of a strong rally as everybody starts to, reprice trade deal getting done. GDP is going to improve. We're going to see, some pent up spending, blah, 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 whatever else. And I'm thinking we may have to wait maybe a couple weeks after a trade deal gets done, at least to, once phase one is done, then, they sign it. Everybody goes, yay, and we see a couple week rally. And then I'm going to start looking to sell equities. And what I'm going to do is I'm going to look for all these yen pairs to actually finish what they've got to do here, especially if they're indeed doing what I think they're doing. Like you got this euro yen. This is a false breakdown last night. You look at all these moves, euro yen flagging, that takes us to 125. Aussie yen, probably to this downtrend line. This is going to be one of the biggest beneficiaries of a China-U.S. trade deal. U.S. dollar, Japanese yen, inverted head and shoulder pattern, probably take us to 112, 113. So, you get all of these yen pairs to move. You get, the S&P does one of these, right? Here's the S&P. Dollar index rolls over. S&P does one of these. We do like a ramp up blow off top, right? Which we've been talking about. One of the probably the freshest in my mind capitulation points. Actually, I bet none of you could name it. When's the last capitulation that's really fresh in my mind? Can any of you guys? Do you guys know? Take a guess. Nah, not Bitcoin. Bitcoin. Well, I wasn't watching it, so Bitcoin maybe. but one that I was vividly watching. Those of you that have listened to my webinars for the last 10 years or so, you might be able to actually guess this, but everybody else, I don't know. Where is? Oh, it's over here. Sorry. Let me see it.
Euroswiss after they dumped
Nah,
the
fuck that. That was. Oops. I'm
Ooh.
sorry.
Oh,
Sorry, guys. No. I'm sorry. I'm tired. That slipped out. That was beep. No, screw that. That was engineered. My bad. I'm sorry. I didn't.
put on your public face, bro.
Sorry. It's on. I just didn't. That totally slipped out.
It's okay. Show people
no.
what you're really like. Go ahead.
Hey, look. I was a Marine. I got a sailor mouth. I try to. It just.
Yeah, you earned it.
Yeah. Not. This is PG-13. I'm sorry. I'm gonna check. I've been doing a good job over the last.
Yeah, this first time I ever heard you say that. It's so
You
refreshing.
heard, all you hear is fudge that. Fudge.
Ben says,
It's so.
Okay, so if I have to, all right.
I feel like I know you now.
Those people that know me from a long time ago remember this move right here. And you'll remember when this happened in the dollar Canadian, I said, and I was live. I was on a live broadcast the next day, and I was leaving to go out of town. And I said, that is a generational low in the dollar Canadian. I'll never see that price again in my lifetime, ever. Okay. That was a dollar Canadian. Complete capitulation in the market. That was back in 07. So that was 12 years ago. And I was on a Wise Trade TV broadcast, and I was leaving that afternoon, and I said, look, because I was up and I got long. I was short, and I knew that the price action was out of control. I knew it was going to just capitulate. We were going to shake them all out. I ended up staying up all night, and I was living in Dallas at the time. And so it was maybe like 1 o'clock in the morning when we finally, 1 o'clock in the morning Central Time. So it would be in, 2 o'clock East Coast time, right in the middle of European trade. And we saw, this is a massive move, by the way. Yeah, I know it's hard to tell, but this is 93 cents to 90 cents. And everything crossed. Bids, offers crossed, just complete shakeout. But the point I'm trying to make here is these are the things that I look at for big reversals, like capitulations. And I've only seen a few of them in my lifetime. So, and I've been trading for 22-3 years, and I've seen them a few times. Crude oil is one of them. Canadian, not at the same time. Crude at the top was. Actually, my friend marked that high because he said he's getting long crude oil the day before. So, and that's a friend of mine that doesn't trade. So but yeah, I told him not to, but he's like, I'm going to do it, man. I'm like, don't do it. And I knew it was the top there, but anyway, that was the generational low in the dollar Canadian. We'll never see it again, but not in my lifetime. But that move right there, you'll notice what happened is we were just grinding sensation, right? And then you saw the acceleration. Do you notice the acceleration here? This took 2-3 weeks, right? Right?
Yeah.
That's kind of what I'm expecting out of the S&P. We ink a trade deal gets done. You get to realize these commodities, they have a long way to rally. People are going to feel that inflation is going to rise. Rates are going higher. You're going to see a real big spike up in the Aussie. Probably, like I said, Aussie probably will trade up to, from current levels, 72, 75 cents, something like that. I'm just guessing, obviously at this point in time. Dollar Canadian will probably, slump to 128. Those types of things will probably happen. Dollar yen rise to, 111, 112. And you're going to see these yen pairs just explode. And it's gonna get some sort of shakeout now. And frankly, I'll be looking at the yen pairs to cue.
Like,
Yeah,
sorry,
we got
initial jobless claims coming out now.
it's crap.
Yeah, as expected. Nothing to see here.
Nothing's gonna happen here. But what I'm trying to say is
Screw those jobless claims.
what I'm expecting is I'm expecting some sort of probably a couple week. I'm hoping we just get some sort of blow off top. That's what I'm hoping. And but you can see what I was trying to point out from last night is you can see the just pent up energy from these yen pairs. I mean, euro yen was last night 100 pips lower from our highs pretty much, and we spiked up. Pound yen, same thing. We're 39.50, 40.50. Now obviously Bank of England's sunk the pound yen back into the apex of the wedge. Aussie yen, I mean, that's 100 pip rally. When a deal gets done and the market's pretty confident that the deal is done, it's signed, it's done. Maybe it's next week at the NATO event next Thursday, I believe, or the 12th. What's the 12th? Tuesday? I believe it was Tuesday. If that's the deal, that's when the deal gets done. Hey, just be careful. I just want to say, be careful. I'm more prone not to chase the market and even let it go up for 2 weeks and then look to sell everything. I mean, that might actually be my plan of attack. I might actually miss the entire upside of whatever happens, depending on how I'm positioned. But man, this US dollar Norwegian krona is not going to bounce. Son of a biscuit. I just wanted to bounce.
Oh yeah.
Nice
like
impulsive.
Yeah,
move.
no, good for you. Good for you still. I took mine off and I made it. I have to tell you guys, the US dollar Norwegian krona, it pays really well if you're on the right side. Obviously you can lose a lot on the wrong side. It pays really well on the long side. I was half the size position I was in the euro, and I made back all of my losses from Monday on the US dollar Norwegian krona overnight. So and I was in half the size position. So I mean, from a number of lots traded, well, maybe a little bit more, but still, it was it's a hell of a move last night, and I missed a lot of this downside. Anyway, I am looking for a rally back so I can sell rallies, but I'm going to pass it over to you guys. I'm done talking. I've already reinsert foot into
Try decaf. Try some decaf, bro.
I'm on my third cup. All right.
Have a good one, Blake.
Thank you, Blake.
Too.
And you know what? Rick remembers. See, it's not that Rick remembers you talking about Canada. It's that Rick is still hanging out with you after all these years in a revolving door business. That is what's cool.
Rick is Rick R in our chat room. I met him in person 14 or 15 years ago.
Most people stay with a guy for a month or two and then look for the Holy Grail somewhere else.
Yeah.
Right? That doesn't exist.
No, Rick's been a long time,
03.
Yeah, and then we also
years.
2003, 16 years.
Yeah, man.
We've met,
that's a record.
Different occasions in person. Yeah, so it's been a while, and he's been in our he's a staple in our chat room. So he's the Euro Aussie Slayer. Like,
okay,
he crushes it.
All right. I think it's just really unusual and unique in this industry to maintain a relationship with somebody that, people ghost each other, them for a year and then they disappear.
Yeah.
Okay, so 16 years.
We have some trade, like, you take Ron, Cal M in our chat room. He's in the Northern California. I've met him in person about 6 or 7 years ago when I met Rick for the last time. I mean, in person. But Ron's been in our chat rooms for 10 years, maybe.
When you were funnier, according to Neil Pat, you were funnier at Wise Trade than
I'm sure I was. I probably let a few F-bombs drop more back then because it wasn't my company. But like Amir, I've met Amir probably a half a dozen times in person, and there's a big long backstory with Amir, and we'll have to have him on as a guest sometime here in the near future. But yeah, he's been in our chat rooms for 10 years, maybe roughly. So
Anyway, that's the exception, not the norm.
Bottom line, for a synopsis, the audience, requires more vulgar outbursts. A, B, more singing, especially Smurf song, Blake,
yeah.
and more songs.
Oh no, we don't want to do everything is awesome and Smurf songs. You guys hear that?
Blue light special and all the rest.
Oh yeah, I mean Steve remembers back in the day. Okay, hey, enough.
You had a whole
reminiscing.
stand-up routine,
Guys-
buddy.
Yeah, good luck today. I'll see you. Hey, is tomorrow Thursday? Friday. Tomorrow's Friday.
Yeah, we wrap it tomorrow.
Thank goodness. All right, we
Yeah,
have
okay,
Canadian employment. Let's. I'm still long Aussie Canadian. I'm hoping we can pop above 91 before tomorrow, but we'll see. All right, guys, have a great one, and
You too,
thanks
Blake.
everybody.
You
Thank
too,
you,
Blake. Hello,
Okay.
Steves.
Hello, Dales. So
So nice to be back on my regular computer. Feels like,
nice.
yeah, mostly getting rid of the magic mouse, crappy mouse too.
All right. Okay, a couple of things I want to talk about. Blake mentioned the US-China agreement, let's say, about tariffs. The interesting thing to note is that they have said that they're going to roll back additional tariffs. So basically, tariffs that they have not applied yet, but they're going to start rolling them back, the implementation of them as the agreement progresses. So, just to keep in mind, there's nothing, obviously it's good for sentiment, but it's not actually something material yet because it's future tariffs that have not been applied yet. So that's one thing I want to talk about. Then the other thing is obviously the Bank of England, who voted.
Yeah, that was a little. We had a little surprise there, right?
Yes, voted to keep rates unchanged, but there was a 7-2 split. 2 members voted for a cut. It was Saunders and Haskell. I was actually surprised because there are 2 big doves in the Bank of England, Saunders and Vlieg, whatever, however you write this guy's name. This guy used to work for Brevan Howard and Deutsche Bank, so he comes from within the banking system. And it wasn't him, it was Haskell instead, who was considered to be neutral. So that was interesting and not expected by the market for sure. Well, I can't say for sure, but the market took it. The sterling has been selling off a little bit today. Also, it's November, so it's inflation report month, which is always very important because historically this is when the Bank of England, they make their changes in terms of policy, or they start or the end. Actually, not the end. The start of cutting and hiking cycles usually coincides with the inflation report months, but obviously they didn't cut this time. What they did do is they are lowering forecasts for growth, and they're now forecasting 1.6% for 2020, 1.8 for 2021, and 2.1 for 2022. So they are
they can as well play the lotto numbers.
Yeah.
It's an equal possibility of making it. Yeah.
And Carney did say that the increasing uncertainties from external factors is forcing the Bank of England to be cautious.
For some weird reason, every single economy is perfect. But there are some outside factors always that might end up messing things. Isn't that very weird?
Well, he did say that the Brexit non-closure yet is still a worry, but he was asked explicitly, and he did say that he thinks that a Brexit deal is a most likely scenario and that it will be positive for the UK economy. Well, I can't disagree with him on that actually. So that's what Carney said, and that's why he's being paid the big bucks.
Yes.
So what else? We had CPI out of Mexico. Really, who cares? It was.
We forgot to comment the other day about Lagarde's statements. I don't know if you heard her.
Which one?
Basically, the bottom line was, people should stop obsessing about savings, meaning the effect of like negative rates and 0 rates on savings, and they should focus on jobs.
Yes.
Now, I know this is a case that I cannot really blame her because, the other guys that have PhDs in economics don't even understand that because, if your work and being paid depends on not understanding something, you will never understand it. I mean, she's a lawyer, but somebody should explain to Mrs. Lagarde that jobs are created from savings,
Yes.
because savings are used for investment. Investment creates tools, machines, and everything else, which is actually what creates jobs and increases human productivity. But I guess, she wasn't in the class in Economics 101.
Yeah, makes you wonder, doesn't it?
Yeah.
And I think that's it.
Okay.
So you
Celio,
can take it away.
Let's start from something you're definitely going to like, and I know you're going to like this. And this is the EuroNOC. Since Blake, mentioned it, and he has so recently fell in love with NOC, better late than never. He came to our camp, right? I think, it was about time, and as always, he had a great timing having to do with the technicals. We had two possible interpretations here with what's happening with EuroNOC. One thing is for sure, this trend line support dates back to 2013, so its importance is without doubt. But now the question here was, what was the trend line resistance that was important? Was it this one, the purple one, or was it this one, the red one? Because both of them form different type of wedges. So we got rejected from the second one, and now we are back testing the first one and previous highs. So things are quite simple here. Below like 10.05, we then have a lot of thin air. I mean, we can easily move down to this trend line, and needless to say that if at some point we make it below that, then there is like a huge potential for downside, because this can prove to be a terminal formation that might lead to a totally different trend, right? So I have to say that Blake smelled blood here, and I can see why. EuroNOC is starting to get quite interesting, and as I said, we're currently testing the first key area of support. Below that, below 10.03, 10.05, I think we can easily move down to the 200 daily moving average, which is quite a big distance from here. And then below that trend line, it's a totally different story. So EuroNOC, definitely something to be in your radar. And keep in mind, as mentioned before, you will also have a positive carry. So not a bad proposition at all, because that is, I mean, even if it plays out slowly, you still have nothing to lose, actually. You have, to gain. So, that's about EuroNOC. Now, having to do with the USD NOC, since we started from NOC today, there we go. So USD NOC, if you remember, I think we've shown this every single day for the past few days. Broke through this ascending wedge, came up, retested it, and it seems to be miserable failing. Retesting the 50 DMA again, below the previous low here at 9.070 something. I think it's, opens the door for 8.93 next. So USD NOC also looks quite nice here. Look at the prolonged RSI divergence as well. So not bad. Now, having to do with the pound, a lot of people got surprised today. Now, yeah, it's not that I expected like two descendants, but what isn't surprising is that, of course, the pound needs to correct, even more. I mean, it has to correct either in time or in distance or a combination of the two. So this can be a triangle here. If that's the case, we should find support, somewhere here. Now, there's also the possibility that this is some type of a flag, right? In which case, we have the ability to move a little bit lower from here. In any case, I think it would be a mistake thinking that this is a reversal formation, because the chances are against that. That's what I think. We can slip even lower, of course. I mean, we can even make it back to 126. There is even that scenario. But in any case, Worst case scenario, 126. Worst case scenario, in my mind, which is also the retest of this wedge, is going to be a very decent buying opportunity. So I'm going to be closely monitoring it, and let's see how how low it can get before getting bid again. But as I said, I'm quite confident in being constructive. Now let me go through some of your questions.
Steve, ever hear of the comedian Carrot Top?
Carrot Top. Yeah,
Guys, you've
that's-
seen him?
that's an
Huh?
old. That's many
Yeah.
many years ago, right?
Yeah, yeah. I heard he just committed suicide.
Oh, that's
He was
interesting.
on stage and he threw himself into a juicer.
Oh my God. that was a bad one.
Huh? Bad one?
Yeah, that was a
I
bad
made it
one.
up, man.
Carrot
You
Top.
like it?
We had actually I had a classmate which we called Carrot Top because he was red haired, and
Keep him away from juicers.
in Greece having red hair is extremely rare. Extremely
Yeah.
rare.
Well,
Yeah.
there was an Irish milkman running around in Greece, man. Okay, I'm muting myself.
No,
Go ahead, man. Go
You
ahead.
don't need it. I can use some help. I mean, the market has been really quiet these days. I think we've covered the vast majority of things. Now, having to do with the medals that people ask, guys and girls, nothing has really changed. I mean, we saw these moves lower in both gold and silver. Gold remains within the consolidation, silver above it. So, my
Forex gal looked up Carrot Top's net worth. She knows how to qualify potential suitors.
you see.
Good one, gal. Well, send him your picture.
She's an interesting lady. A lady. I've actually met her.
Have you met her?
Yeah, in the
Okay.
in the expo. Yeah,
All right.
Traders Expo.
All right. Carrot Top's a lot. I'd say he's about $75 million richer than me, Forex gal.
Coach, did you mute yourself?
I'm here. Yeah, I'm here. I'm walking around wondering why. Why Carrot Top has more money than me, huh?
Adrian asked if you imploded when the sound went off.
I did. Yeah. Oh, yeah. Yeah. Anyway, I'm a thousandaire, Forex gal.
You're a thousandaire, eh?
Yeah, or I up from being a hundredaire. So I'm moving towards it. Okay. Yeah,
one digit at a time, right?
Yeah, one. Yeah. What's the rush? I don't rush. Yeah.
Oh.
My first marriage, I was 55.
Really?
I wanted to make sure that I was mature enough.
And
obviously, the way it turned out,
you weren't.
11 years later, I guess I wasn't. Anyway, all right, buddy. So, yeah, I don't know, like doing new things right here in this spot right now. I'm really looking forward to next week because, it's going to be packed with stuff. Okay. I really do believe, and not just because the market's at new highs, that President Trump is going to go ahead with EU sanctions, but also as a distraction as the impeachment goes public testimony. And I've never known an administration that's more sensitive to what's happening in the media. So everything's about the narrative and what people are thinking and talking about. And I don't believe that President Trump's going to want them talking about the public testimonies in Congress. So I think that he's going to show to his base strength by opening another front in the trade war. And I think that's going to put in at least a temporary high in the S&P. So I'm laying for that trade next week.
It is a theory that
It's a
Might hit.
no, it's not
Yeah.
a theory. It's a
Mhm.
guess, and I'm a professional guesser. Aren't you?
Oh yeah, absolutely.
That's
Professional.
what we do.
That's what we do.
Okay. Anyway, that's my guess for next week, everyone.
My guess is that another interesting pair is USD SEC because it's approaching this trend line once again. So, add to the USD NOK and USD and Euro NOK, USD SEC in the list of, things to monitor. Now, we had a question about crude and having to do with crude. The only thing I can tell you here is that, for whatever this for whatever importance this has, this is the fourth consecutive day that we're testing this confluence of resistances, as you see. So, can we break through it? I'm not sure. I mean, 200 daily moving average, 50% fib. We can still move a little bit higher and still remain within this channel.
That's what
But
I'm waiting for, bro.
might
That
might
too next week. So I
might be
think,
the case. Might be the
yeah,
case.
I'd love to see it up at your red line confluence 61.8
But
by
it's
Tuesday.
yeah.
Tuesday.
So far, the move higher is not really inspiring. I mean, it looks to me
No.
more likely that it might fail than anything else. So
So
far,
if it can't rally with risk on strength in stocks,
yeah. Imagine if indices actually reverse. You mean hard? Yeah,
there
that's
you
gonna
go. That's
that's
that's my narrative.
that's gonna be tough. Yeah, that's gonna be
Okay.
tough for crude for sure. It's gonna be tough.
Anyway, it's great to have things cased. We'll see, and then it's even better when a plan comes together.
Yeah.
So that's the plan. We'll see.
Speaking of the indices, keep in mind,
Man plans, God laughs.
Oh, very true, very true. Keep in mind, having to, since we're talking about plans, I still have my eyes focused in this zone in the S&P there, like between
Where is it? 3120.
3,107 to 300 to 3,125. So
I
this
like it.
little zone there, which also
Yeah.
confluences with this ascending wedges of resistance. I think it's quite an interesting zone for somebody to make an attempt to be short. We know
By
that
Tuesday.
yeah, we know that the vast majority of the metrics currently also show a lot of froth.
We've got it cased, buddy.
Oh yeah. Speaking of which, let me have a look at what the DSI is since yeah, okay, DSI actually is not that overbought, if you notice here. Kind of surprising, although the fear greed index is very high. Nasdaq is at 81, S&P is at 77. So from a DSI perspective, weirdly, not really overbought readings. I would have expected actually higher readings from the DSI, but okay, that's not necessary. I mean, it is a high reading, but it's not like an extreme reading. That's what I mean. So anyhow, that zone I think is quite interesting. Now, having to do with the Kiwi, a little update here. We did pull back from that neckline, so so far we haven't triggered anything here. But keep in mind that we're still above this previous low. So, don't write it off. I mean, there is still a chance that the Kiwi is going to come back, retest that 64.25 area, and then actually trigger this inverted head and shoulders formation. So this is a fourth chart that I currently have, in focus. So, all of those are, in my mind, are actionable charts, and at least probably one, two of them should produce a signal like within, if not this week, because we have like 1.5 days left, within next week. Now, having to do with the DXY, don't forget here that the DXY is testing these ranges resistance once again. So let's see what we will do from there. And I know that Blake opened up by showing what I showed you yesterday in the treasuries. He wasn't here, so we're looking at the same thing, which is a good thing. I mean, it's a good thing to know that he's looking at exactly the same trend line. And look at this. I mean, the treasuries are indeed trying to break down from this channel, right? And that's going to be quite a significant move, because as I was explaining yesterday, that might lead to a temporary strengthening of yields. And I say temporary because it's not going to be that easy to see, a sustained move there. Not initially. I do believe that the bond market eventually, when this business cycle implodes, might actually do what nobody's expecting. And that is, instead of having yields moving lower and lower and lower as a reaction to risk off and flight to safety, um, when likely people realize, I mean, Powell made it very clear. When he was asked, he said in the last press conference, he said that in order for them to start doing something about inflation, they have to see a sustainable and substantial, those are the words he used, move higher. So, all the central banks are in essence, and if you remember, I've said that since a long time ago, have signaled that they will not be fighting inflation. Now, until a few years ago, not only every single central bank accepted that their main business, if not their only business, because, for example, the ECB and several other central banks have only one mandate, and that is price stability. Not only their purpose was fighting inflation, but also there was, the common understanding that once you let the inflation genie out of the bottle, then things become very, very tough. And now we seem to be at the exact opposite situation. Everybody's very comfortable by letting inflation run higher as that's something good. The only reason they're pretending that's something good is because they can't do anything about it. And they can't do anything about it because in order to do something about it, the economy has to completely implode because all economies are over indebted and they can't service the debt anymore unless yields in perpetuity remain grounded to zero. But guess what? Nothing remains in perpetuity at a specific level, no matter how much you want it. So, despite believing that there is a very good chance that yields and bonds might do the exact opposite of what the vast majority is expecting during, the next bust, I think that, as long as things are contained, um, rather contained, we won't see a really big sustainable move higher in yield. So, we might see yields moving higher for a short period of time, but I do think that it's going to be temporary, and then in the medium term, we're going to have again yields moving lower. But this might last like a few weeks, right? This is quite an important technical break. Yeah.
The bonds will turn first, like they always do.
Yeah, what
in both
Mauro says,
directions.
Lagarde saying that people should be happier with jobs than with savings is the same thing. Yeah, Lagarde, as the vast majority of those that believe in only one economic god, and that's Keynesianism, and actually a form of Keynesian economics that not even Keynes believed in. Don't forget that, for example, Keynes was all for government spending to stimulate growth during a recession, but Keynes was also the one that thought that government should run surpluses during good times so they can actually run deficits.
So what did she say? It's better to have a job than have savings?
Yeah. Yeah.
Okay, well, listen, I want to know if she says the same thing in 20 years. Because what do you want? You want 75-year-old men out there with a shovel digging holes, and they should be grateful that they
that's exactly
have a job and have a heart attack.
No, they don't want that, but the way they've turned the economies, they know that's what's going to happen.
Yeah,
So
no savings.
they already try to spin it as something positive, right?
Yeah. Okay.
And as I said before, a lot of people don't understand basic economics. The most important
savings
factor of production is capital.
Yeah.
The most
you need
important
savings.
factor of production is capital. And what I'm saying is not anti-humanitarian. I mean, many people will say, wow, no, it's labor. And, I'm going to ask you the following question. Let's say you want to dig a ditch, and the only thing you have at your disposal is labor. What are you going to do? Imagine humans trying to dig a ditch with their bare hands. How long will that take? How many will you need? Now, imagine getting a little capital in there and giving them shovels. That will increase productivity by like 500%. Now, imagine giving a single worker an excavator,
Yeah.
right? That will increase productivity by like 50,000%.
Unless I'm operating it.
So the next question is, where does capital come from? There is only one answer. Somebody naively might say either from credit or savings. And the answer is you just said the same thing twice. Because credit comes from savings as well. Right?
Yep.
In order for you to borrow now, which means overconsume, not with a retail sense of consumption, somebody has had to underconsume at some point. Underconsumption equals savings. So if you actually destroy savings, you destroy investment, you destroy productivity, you destroy the economy. As simple as that.
Well, Steve, it's interview time, but you know what? What they call, I audited one of your classes, and I've come up with an answer for the test that you were giving the class. What's worse, ignorance or apathy? And here's my answer. I don't know, and I don't care. What's my grade?
A+.
You passed me? Okay. All right. Anyway, Ben is with us. Steve, thank you for the review. I think we prepped people. Here's Thursday, and I think that we're all kind of prepped for what could happen next week. So I'm going to bring Ben on and see if he has what his cycle work looks like. And great job, Steve. You're the best at giving a review of the board every day.
Thank you, Coach. Enjoy the interview.
Okay. All right, Ben. I'm going to unmute you. Welcome back, my trading warrior brother.
How you doing, Dale? Great to hear you.
Yeah, great to have you back, man. Especially with markets making new all-time highs here, blow-off action happening here, and I took a look at some of your work that you tweeted, and maybe we could start there. Wherever you want to start, you know how to share your screen, right?
Yep, I'm getting it up and running right now.
You liked my Carrot Top joke.
It was great. You're really funny today, boy.
Anyway,
you're on.
A lot of, I think 30 people left. It was not politically correct. Okay, so here we are. Why don't you explain to people watching what these grids mean and what you're thinking here?
Yeah, we'll get to the grid charts. I wanted to switch it up a little bit and start with something sort of tactical and practical that hopefully the listeners can use and go out and make some money with it right away.
Yeah, go ahead, make your commercial at the beginning,
and then we'll get into the show. So every day we tweet out these things we call the +3 fuse lines, and they're dynamic levels that seasoned traders have jumped on right away. They know it can give them a way of adding to their edge or whatever they're using in trading to help them limit risk and capture short-term profits. We get a lot of questions from sort of the newer traders or people who don't understand them, say, well, how do you use them? What do they do? So I wanted to spend a couple minutes going over some of the patterns that we've noticed and looking at these things for a couple years.
Sure.
There's about 6 reliable patterns that show up every day. And if you're day trading and you study these patterns and you can recognize them, you can create a significant edge in what you're doing from a day trading basis. The first one, and Dale, I'll ask you the question because you're a veteran and you know this. What's just as important about knowing
as knowing when to trade? What's just as important as knowing when to trade?
When not to.
Absolutely. My experience, the thing that's destroyed accounts for me and ruined performance and wiped out weeks or months of work is trading and over trading at a time when you shouldn't be in the market. So one of the patterns that we identified and is critically important for any trader to recognize, whether they're using our stuff or someone else's stuff or their own stuff, is if the market's chopping, you got to stay out. And when we
How do you know until you look backwards?
Well, and this is the thing. It's never as clean as anybody shows you in a textbook. And I'm going to show you a couple examples of how muddled it can be. But one of the things that we try to do, and successful traders that I've studied and read about, and in my journey come across, they all limit risk. Right? They get into the markets and they limit risk. They know quickly if they're wrong and they get out. And so what we've done is this pattern we call the misfire, is where you cross the fuse line more than 2 times, the market is telling you and signaling to you that there's going to be chop. So when you see a cross and then a cross back and then another cross, it's a warning sign to you that you're most likely going to be in chop. And here's an example. And by the way, these examples that I'm showing are not sort of hand-picked examples, and we're not creating something. These are all from the end of the day slides that we tweet out showing what happened with the fuse. It's called like the daily recap, I call it.
Okay.
So in here you see we're coming into the open, and the other thing about if you're going to try to use these lines,
what's the time frame on this?
This is 4 minute.
Okay, why 4?
Because 4 minutes aligns with the fact that the Earth moves 1 degree every 4 minutes.
I knew there was a reason. Okay, interesting.
So the
I feel the Earth moving under my feet. Go ahead.
So here's the open is denoted by the green line. Using these fuse lines, it's best to use them within the first few hours of the open, because you get the most energy in the market after the overnight session, and you get a lot of powerful moves. So here you can see coming into the open, we crossed down, we crossed up, we crossed down a third time. The remainder of the day and the balance of the day was chop.
Yeah.
And so the key is, let's say you took the trade here and you said, okay, we came back to the line, we held it, we're going back up. You're wrong here. So what did you risk? You bought here, you sold here. You see,
all right, move your cursor. All right.
Sorry. So you bought,
okay.
if let's say you tried to buy this here, we
right.
pulled away, it looks good.
Yeah.
It comes back, you cross again, you're out.
Okay.
So this is the thing. It's not going to be 100% right anytime. Nothing is. There's no certainty in the markets, but you got probabilities in your favor with low risk. You cut it right there.
Okay.
Another example. Cross down, cross up, cross down again. We chopped all day. So this line can give you the reference point of where you're wrong, number one, or where the information from the market is. It's not strong, it's not weak, it's chopping.
How big is that green range in handles?
This range here, the green range, or here?
Yeah, the range that the line that you're talking about, that green rectangle. Yeah, that area.
The actual range is a specific point. I mean, the actual line is a specific point, 29.88. The range here is about a half a point.
Okay.
So you're really tight in terms of your stop.
Okay.
The next pattern we've named the Hellfire, and we call it Hellfire because, as you know, if you ever get caught trading in a triangle, it's hell. But it's a classic triangle pattern. The pattern appears generally, it can be above the fuse line, it can be below the fuse line. Here's an example above, here's an example below. It can also be across the fuse line, and we'll show you a couple examples. But the key here is, here's one right after the opening. We're in a triangle, we're crossing the fuse line. As soon as we can break out of the triangle, which is right here, we break out of the triangle, we have a little pullback towards the fuse line, you can trade. You've held the line, you can trade this reversal here, and your stop is below the line. And you can capture this sort of move. And again, this is a 4-minute chart, so it's a fast move, and it's one that you can capture with low risk. Here's another. Here's another example of a Hellfire. Same sort of situation. You got your triangle, you break the triangle, you come back. See how that the low of that bar stayed on top of the line?
Yeah, nice test.
Green light, go.
Okay.
Next one. Ricochet. Ricochet is a simple pattern. It's real easy to recognize. You stay on one side of the fuse, you pull back to the fuse, and you go. A couple quick examples. Coming into the open here, we're above the fuse, pull back to it, go.
Okay.
Next one, same sort of thing. The open, we're above the fuse, pull back to it, and then we go.
Nice. You call it fuse. Other people would call it pivot points, right?
That's right. It acts the same way.
And when you come up with these, are you looking left?
Well, and that's a great point. And I should have mentioned that in the beginning. You gotta know whether you're day trading a 1 minute, 30-second chart, 4 minutes, whatever you're using. You gotta know where you are in a move in the bigger picture. So we constantly reference the 30-minute chart, the hourly, the 4-hour, the daily. You have to have a bigger picture view of where you are. You can't get so zoomed in on a 4-minute that you don't realize where you are in a move. So that's a terrific point.
Okay.
Here's another pattern. It's called a hang fire. It's got all the feelings of a false break. The example here shows you're below the line, you break above it, and then you collapse. Here's the opposite side, the inverse of that.
Oh, have you noticed a lot of those lately?
Yes. Here's one that shows you right after the open, we're above the fuse. We come down, do a false break with the previous low, and then take off, and you get a fantastic move higher.
Where's the trigger on that?
On this one, let's go back to that.
Yeah.
So your trigger would
above
be
that yellowish area.
Right in here. Yep. Yeah. As soon as we reverse this bar reverses, you're in here.
Okay, but are you in before you know how the candle's going to close?
Well, since we're dealing with 4-minute,
you have to be, right?
You have to be, or you can. It's what we'll do is I'll look.
I mean, you didn't get hurt waiting for that bar to finish.
Hell no.
It still worked. You didn't get the edge, but you had more confirmation, right?
That's right. And I think it's, you can use trend lines, right? Trend lines help us identify where we're actually breaking out. So you draw trend lines. You can use a 1-bar reversal. You can use, some people want to enter, there's many different ways of entering, and that gets back to a trader's style and risk tolerance, right? It's how you want to enter. Okay. Let's go to the next one.
One of our attendees is saying, please use cursor when you're talking about it.
Okay. Here's the flashover. This is a very interesting. Oh, I'm sorry. No, this is the another example of the false break pattern. We go up a little over the line, come back and reverse. Here you got a nice retest that you can buy into the line. So you could have either bought a reversal off there, you could have bought the line, and then you ride it back down.
Okay. One toe over the line, sweet Jesus.
Here's a pattern.
This is a song for every pattern.
I know, it's fantastic. The musical accompaniment I wasn't expecting, but it's great. Here's a pattern we call the flashover, where you have a triangle above. These are also, some people call them flat bottomed or flat top triangles.
Descending.
Yep, descending, ascending.
Yeah.
Here's a couple examples. Perfect triangle under the line, break above it. You can buy the breakout, you can buy the pullback. Either way, you don't take any heat and you're in profitable territory with a nice tight stop right below there.
Okay. Here's
another example. Flat top triangle on the line, breakout, big move higher.
Yeah.
This is the last one, the spring. The spring is where we cross the line, pull back to the line, and go. Classic ABCD pattern. Everybody knows ABCDs, right?
Okay, yeah.
So here we go. Above the line, pull back, go.
You had multiple opportunities to trade that there.
Yep. Here we come down below the line, pull back into the line, can't get above, can't stay above, come down. And you could buy here, you could buy this pullback. Again, it's your style and your risk tolerance and how aggressive you want to be. And that covers those patterns. So what we're going to do is we're going to put together videos and things and put those up, because I think studying the daily recaps, looking at these patterns and being able to identify them is a great way to create an edge if you're a short-term trader.
Yeah, I would say that's enough patterns to, and how many different instruments with these patterns are you guys covering?
Right now, we're just doing ES. But there's some people that trade the SPY options using it. Some people trade the futures. I mean, there's all kinds of different ways to take advantage of it.
All right.
The next thing I wanted to talk about, this is the cycle work. This is the stuff that you like, Dale, and let's get into
I really
this.
like it.
Yeah. So here
on Sunday I say, rejoice and be glad, instead of saying this is the day the Lord has made. Go rejoice and be glad. We can trade the cycles.
That's right.
The Lord has made. So yeah, this is nice.
They're fantastic. And one of the things for people that don't study cycles or haven't studied them, remember, you're not looking for things to be exactly the same. What you're looking for is connections through cycles that will then create an environment and an atmosphere where you're going to get similar type of action. They rhyme, they don't exactly repeat. So that's the caveat with cycles, and studying them for 20 years. That's what the main takeaway I have from them. So here Dale and I've been talking about this since the beginning of the year. I've been watching this thing for a long time. There's an analog, and the cycles that we're currently experiencing now in present day are connected to the period of the early 1970s. The evidence of similarities that we've talked about include President Nixon at the time in the early 70s was at war with the Federal Reserve. He was pressuring them to lower rates. He actually got them to lower rates into the election. He sort of created the battle between him and the Fed, and if the economy was bad, it was going to be the Fed's fault for not cutting rates.
You know, Ben, one thing I just thought of, and one of the reasons I interrupt is when I have a thought, I want to get it out, or I'll forget to ask. Because in fact, I already did. So go ahead, I'll remember.
Okay, so Nixon was at battle with the Fed. Fast forward to present day.
Okay, I got it.
Go ahead.
Nixon and the Bretton Woods Accord happened under his watch, where he took us off the gold standard. Any parallels that you could possibly see with the current period we're in? Could it be a currency reset? Could there be anything out there that, besides him being impeached, that was one of the most dramatic economic monetary events of the century, is when we went straight fiat?
And you know what, Dale, I think that's an excellent point. I hadn't made that connection, but as you were talking about
I never thought about it until now. I think about this. I see the parallels, but
think about this.
What about that?
That's exactly what's happening now. He took us off the gold standard so that the government could print money. We are now in fiat on steroids.
Yeah,
because they're doing.
So what could President Trump do that might be analogous to what happened with Bretton Woods?
I think he's already doing it by running $1 trillion deficit. And are we going to get negative interest rates? Are we going to get this MMT garbage that people are talking about? I mean, who knows where it's going to lead? But
a currency reset.
A currency reset. I mean, I think all that stuff is on the table now. What was unthinkable a decade ago is all on the table.
Okay.
So I agree that there's another connection there.
Okay.
Other connections. Nixon was at war with the press. The press was the enemy of the state. Trump is actually, it sounds like he's even more at war with the press than Nixon was. in the markets, there was the Nifty 50. There were these 50 growth stocks that everybody had to own. Today, it was the FANG stocks: Facebook, Apple, Amazon, Netflix, Google. The president at the time, Nixon, was the first president to ever visit mainland China. He opened up relations with China. Right now, we have a president where everything is about him and China and the relationship with China. So the connections are unreal. The recent ones you just mentioned, Trump's going to get impeached.
Nixon opened it. Trump will close it.
That may be it, right? That's the essence of the rhyming, right?
Okay, we started with Bretton Woods, and now we're at the extreme of the experiment that finally fails.
Absolutely.
Okay,
I think those
Interesting.
connections there. And the other one, Dale, that we hadn't talked about before is, and it's an obvious one, social unrest.
Yeah.
The period of the early 70s around that Vietnam War there was tremendous social unrest and social upheaval. We're
Yeah.
going through the same thing today. So the connections are there. Now we say, okay, what's going on with the markets? Here's where what happened in 72 to 75.
Yeah.
Here's where we are now. My contention is we've put in 6 points. We're now putting in point number 7.
Okay.
I was expecting a high somewhere in the 3137 on the ES area, 3135 area. We may not make it up there, but somewhere in this area and in this time frame, we're going to put in that high. We're going to get a decent.
Do you want
type
to
of-
know when?
When?
Tuesday, on the full moon, and a day before the public hearings, and 2 days before President Trump opens up another front in the trade war with EU sanctions on autos.
Mm-hmm. And you know what? There's a nice cycle hit middle of next week. So
Okay,
it's all in the window. So we're going to
so
get a pull.
excited.
Yeah, we're going to get a pullback, whether it's a consolidation, a sharp pullback, or what, we don't
Yeah.
know. After that,
Boom.
if we continue to follow this analog, we're going to put in a blow off type of top high into next spring. And wouldn't it be great, Dale? You'd love this. Wouldn't it be great if it was around the vernal equinox?
Yeah, spring.
It could be in that time frame. So that's the speculative path we're looking at.
You know, you're not the only one that's pointing towards spring, which gives me conviction. You know, I've interviewed over 1,000 guys, and some of them are, you know, have bents of cycles. They don't like to talk about it because they're on CNBC, and that would be too voodoo-ish for them to
Right.
talk about. You know, they would go, "Oh God, this guy wears a tinfoil hat. We're not going to have him on again." But Mark Newton's a very good cycle analyst. He didn't talk about him a lot, but when I had Mark on, he was saying cycles for him didn't turn negative until next spring.
I think late March, late April, in that March-April timeframe, we should
Yeah.
put in a serious high there. And as always, whether you're doing cycles or whatever type of analysis you're doing, you got to look at price, and price has to confirm. And so far, events and price are pointing to this as a path.
Yeah, no, I was warning about a throwover in the Nasdaq here short term, but when you look at that megaphone that you have there, Ben,
Yep.
the throwover that you're looking for is going to be pretty massive. So
Massive.
when we get to 0.9, you know, you're probably not going to be late if you don't short it up there. But I would say back in the megaphone after this spring would be a pretty good sign that there's some danger in risk.
If this is what we're looking at, some variation of this, I would
Yeah.
agree 100%.
Yeah, interesting.
Yep.
Okay.
So let's go to now some of the tactical stuff on the monthly. I want to show this to show that here's a major breakout, right? This is a major breakout. Some sort of pullback to test this line. Maybe that's our 0.8, which would put us around, 2990, 2980, something like that, just
Okay.
under 3,000. And then that could be the launch point.
Okay.
Zooming in a little bit, here's your weekly. Again, another breakout. This
Yeah.
move is a breakout. We have room now. We've created air enough to pull back and retest here. So watching what happens on this pullback is going to be critical to seeing, okay, are we on path to hit that 0.9, or is something else going on?
Great point.
Shorter term, here's a 60-minute chart that I use. I post this every day to help people. And the reason I'm posting this is to show the market is sort of a limitless environment, right? It can do anything at any time. And what I think our job in the analysis that we have to do is we have to squeeze down the area that it operates in and say, okay, if it does this within this area, I can trade it and I can have an edge and I can know where I'm wrong pretty quickly. And
How much time in the grids, in each grid?
Each one of these,
Yeah.
it's
and then the smaller ones.
Yeah, the smaller ones are half. So this I think this is a square of 60. So this would be 60 trading days, and this would be 30.
All right.
But this basically gives you the geometry of a square and allows you to sort of say, okay, if we stay above this, it's bullish. I got support here. I got resistance here. I got support here. If I'm on the other side, I got resistance. So it's just another way of narrowing down the area and creating an edge.
Scott wants to know why 60 days.
Different markets and different time frames will resonate with different frequencies. You just have to find the one that resonates, and then put it on and watch how price reacts to it.
Okay.
It's not always 60.
Nice formation in beans.
Yeah, I'm going to quickly go over a couple markets that just to review what I see and what's going on. Here's monthly beans. This is set up for a massive breakout if we can get over this trend, this descending trend line. Yeah. Here you can see we were respecting this support, this geometric support resistance on multiple times. Got a nice little false break here. So we're testing this line. A breakout here would be massive.
Beans in the teens again. And it used to be a war cry at the Board of Trade.
Is that right?
Because it never happened. I mean, we'd get till 1280, 1250, and finally, it happened early in this millennium that we had beans in the teens. That used to be a war chant at the board.
I like
now
that.
we could say beans in the 20s.
Wow.
Coming up.
Yep.
That's what your return lines say here, right?
Yeah, for sure. I mean, look at this. This is the daily, same thing. Respecting geometric support resistance, pull back to the previous highs. This is as long as we can hold this level here.
Yeah,
we could launch. We could launch on beans.
I'd like to buy in the low 9s.
Yep.
In the next month or so.
Here's gold. A lot of people asking about gold. Interested in gold. I'm very bullish on gold longer term. We did have.
What do you do here then? I grilled Steve. So you're a bull long term.
Yep.
Does your bias prevent you from getting short for a move to 1400, 1420 because you're bullish?
I'd have to see this support resistance break for me to want to get short gold. Right now, we did a perfect ABCD down off the high.
Well,
right into support resistance. This is, I don't want anything to do with this because this is an account killer, sloppy, choppy sort of thing.
Yeah.
But if there's a cycle hit in early December, I want to see how it reacts into that. If we can hold these technical levels and price confirms by not getting weaker or getting below this support resistance, I mean, I could see targets in 1614, 1744, all the way up to 2000. I mean, gold is very bullish long term.
Okay. And I will acknowledge that you did an interview and you had that horizontal line. I think it was 1360 for the breakout. And you said, I'm waiting for this breakout, and it never looked back.
Here it is right here. This was it.
Yeah. Great.
There's your breakout. There's your retest. There's your go. I mean, this stuff
works. Isn't it nice that I only remember your good ideas?
It's fantastic.
Anyway, my Bankwire number is blah, 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 blah.
It's like I put in one of my tweets I sent out.
I'm a shill.
Talking about our talk today. I said, often wrong, never in doubt.
I like it. Yeah.
Here's crude. Crude has been in massive chop since June.
Yeah.
But again, look at us. We're holding this important support.
It'll take that out.
It might. It very well might.
With your pullback in 8 in S&Ps, I'm anticipating a breakdown under those lows.
It might.
Anyway, because it's more economically sensitive than gold's a little different animal, and so are soybeans. But I think there could be a problem with crude.
If we take out this support and we
Yeah.
stay under it, I'm 100% with you. If we can get above this 57, 10, 20 area and hold above this, 64 to 69 is
About
not
58
impossible.
and a half to 61.8 back from that big drop.
Mm-hmm.
So we'll see next week. We'll see what happens Tuesday.
Yeah, right now we're in chop.
Okay.
Notes, 10-year notes. Interest rates are a big deal right now,
Yeah.
clearly, and bonds are in a weak position, to say the least. We had good geometry at the high, both on a daily and a weekly basis. This ABC down completes at about 128.05, so that's a reasonable target for this. If we can
Just
pull
enough
back,
to clean out the stops under the lows from the first break.
that's it right there. And if we
Okay.
do, look at what we have here. We'd stop right on the previous highs.
Yeah.
So it's in the short term, I think we're weak, and we gotta
Yeah.
watch for short term weakness. But this thing could again rally up. And if you want to tie it up into the other markets, if we're going to make a moonshot high on equities,
Yeah.
this probably
goes
comes down. And then if equities are going to turn and go down, this probably comes up and makes new all-time highs.
Yeah.
At some point.
I like the jigsaw puzzle you put together today, Ben. So we could wrap it, and you want to wrap it with this slide, Mark Douglas, trading in the zone. I love,
Mark is great. I think I want to spend more time on that. So let's just wrap it today, because I think what and you did this a few weeks ago. You had someone on who was talking about trader psychology. I think it is critical. I think it's one of the most important things that can help people get breakthroughs in their trading. It's more valuable than any indicator in the world.
It's all in our heads.
It's you gotta get the right mindset if you're going to be successful. You can have the greatest tools in the world. If your head is not right, you're not going to be successful. I'll just quickly tell you a book that changed my trading. It was Mark Douglas' book, Trading in the Zone. If you get that book and you read it and you can absorb the material and you can implement what he tells you in terms of how you should think about the market, it will have the most dramatic effect you've ever seen on your trading.
Okay, Scott wants to know how he could look over your shoulder. So why don't you tell people how to reach you?
Well, the right now everything we're doing is free. We're putting everything out there. We don't know what we're going to do with this. This has been a project that we started.
I know you're just waiting for the Nobel Peace Prize for humanitarianism, and then you'll charge $200 a month. But once you've been awarded that thing and use that for marketing purposes, as Scott, look at what we've done for free. Now, open your wallets now, buddy.
Follow us at +3 Forecasting, and you'll see the stuff we do. We put it out every day. It's really good, and it'll help you. And the key thing about it is we're not putting something out that we don't use. We eat our own cooking. This is what we do. We trade this stuff every day, both in futures and options. So I think and what we're trying to do is make sure that people understand how to use it, how it can help them. And then you said this on many of your shows, you have to adapt whatever it is you're using to your own style. So
Schwager said the most important thing when I interviewed him, I said, what's the most important advice you can give? And he said, find a trading style that suits your personality. That's Jack Schwager, who's interviewed all the wizards. So,
and I think that's what you do. You take these tools, take the things that Dale teaches you every day, and the speakers he has comes on, talks about, and mold them to fit what you're doing. Fit what you're doing, fit what you're comfortable with. Not everybody can trade the same way, but everybody can trade successfully if you have an edge, if you execute your plan, and think of this game, and not in terms of I have to predict, I got to be right, I got to be this or that, or any of the stuff that you have in your head. Look at it as probabilities. you're gonna be wrong. You're gonna be right on some trades. As long as you have an edge, as long as you maintain discipline in how you enter and you're consistent and you minimize risk, you'll be successful.
And using risk capital so you're not emotional. So I have to tell you, Ben, another great interview, your best yet. So thank you, my trading warrior brother, for edifying face today.
I appreciate you having me on, Dale. I really enjoy it, and I hope the material we put out there is helpful for people, because it's tough. It's a tough business. Don't let anybody tell you it's easy, or it's, you push a button, you make money. Yeah, that can happen. It's a tough thing. It takes a lot of work, and having people give you a hand up is definitely a good thing.
When I first became a Series 3 broker, a veteran pulled me aside and said, "Kid, this is a tough way to make an easy buck."
Mm-hmm.
He was right.
Absolutely.
So thank you, buddy. My trading warrior brother, everyone, Ben Maldonado. Follow him at +3 Forecast. And I don't remember your personal one, but you can reach him here. And good hunting, Ben, during the fall season. And, we'll be doing this again.
Thanks, Dale.
All right, everyone.
All the best.
Thank you, Ben. So that's a wrap, everyone. Remember, don't just count your pips, count your blessings. We'll see everyone to wrap up the week tomorrow. Oh, you're very welcome. You're very welcome, everybody. Yeah, it's our mission here at Forex Analytics to build up and edify traders every day. Adios.